Hello friends, welcome to Stock Coney. Before moving to our breaking news updates and details, I got to request everybody to kindly like and subscribe. That motivate us to do a lot of research for you guys and bring the best stocks for you. Okay, so let's dive into what's making waves in the Indian stock market this week. From looming US policy shift reshaping the IT sector to fresh corporate actions, plus a snapshot of institutional flow. That's we will talk about the DIs and FIs flow. Okay, so now let's move to our breaking news, friends. There are new developments coming up. A proposal of around 25% outsourcing tax under the US Hire Act is raising alarm in Indian IT industry due to heavy reliance on US clients for services. Friends, what is this 25% outsourcing tax under the US Hire Act means? See, the Hire Act proposes that if a US company outsources job or services overseas, it may have to pay an extra 25% tax on other expenses. So in other words, we can say when an American company hires an Indian IT firms, for example, Infosys, TCS or Wipro, right, for software development, support or call center job, the US government could penalize the American clients by charging them more taxes. So we can take an example. Let's suppose there is a US bank. Okay, they sign a 100 million contract with an Infosys in India. Under this outsourcing taxes, the US government could add 25% penalty. That means 25 million. Okay, to the bank taxable income. So what is the result out of it? Outsourcing becomes much more expensive for the American client. Okay, so now what is the impact to Indian IT sector? First is the reduced competitiveness. Okay, the whole reason US companies outsourcing is cost saving, right? A 25% tax wipes out much of the cost advantage. So whatever cost that they are saving because of the US labor issue, right? Okay, that they have to pay. Okay, it may be 25% that they are saving, and that same 25% that again they have to pay to the US government. Okay, so with that, client may avoid Indian ITs. To escape the penalties, basically, US companies hire um, might hire some local US IT provider instead, right? So with that, the pressure will come to Indian IT firms. Okay, so basically, see now what's happening. Indian IT firm is earning around 60 to 70% of the revenue from the US client. Even a partial adoption of this tax could cut into billions of dollars for business. Okay, so now that is the impact that will happen or that will come to Indian IT sector with this 25% tax. Okay. Simultaneously, there are suggestions of tariffs on IT service exports, treating digital service akin to imported goods. Now, what that means? So when we say tariff on IT service exports, treating digital service like imported goods, okay. So see how this tariff usually work. Normally, a tariff is a tax on physical goods imported into a country. Okay, for example, steel, car, or electronics. So if a US puts a 10% tariff on the imported steel, every foreign steel company has to pay extra tax. Correct? Now, if we apply the same logic to IT services, okay. Now, Indian IT companies like your TCS, Infosys, Wipro, right? They're into export services business, okay, to US clients, such as your software development, cloud migration, data analytics, call center support. Okay, if the US government start treating these digital services like imported goods, they might impose a service tariff on them. That could make Indian IT services costlier for American companies, potentially reducing the demand. Okay, so if you take an example, let's suppose Infosys. We'll take the same examples. Infosys provides around 10 million software outsourcing projects to US bank. Okay, if the US slaps a 10% tariff, the cost rises to 11 million. Okay, now the US bank may then what they have to, what they can do, push Infosys to cut prices, hurting Infosys margin. That means that will be cut in the net earnings. Okay. Otherwise, they have to shift the work to local US IT providers to avoid the tax. Or the third thing, automate instead of outsourcing. I mean, now this AI and automation is going on, so they have to do as much as automation they can, okay, to reduce the overall cost. So why this matters? Basically, Indian IT sectors earn around 60 to 70% revenue from the US client, correct? Even a small tariff will cause $1 billion loss. Okay, same thing, friends. So friends, we understood the risk for the Indian ITs. Okay, there will be a pressure developing at the IT giants like your TCS, Infosys, Wipro, SL, and a lot of other companies which are into IT services. Okay, and but yeah, that's not that easy. The US hire bill still faces the political hurdles. Okay, and there is a lot of uncertainty, okay, in the market also, in the US market as well as in Indian market. And as long as this remains, right, there will be volatility. So what is the long term structural change? Let's suppose if it happens, right, what Indian IT company has to do? First thing is they have to accelerate on the AI adoptions and workforce realignment. You can see recently there was a news that TCS recently, I mean, they have around laid off around 12,000 employees, signaling a deeper shift in the outsourcing model. Okay, so that's one of the breaking news, friends, and currently that is what is going on, and that's the reason why the IT sectors are into deep correction. Okay, so now let's focus on the next section, that is on the corporate action. Okay, there are a lot of dividends, split and buyback coming up next week. So let's discuss on the dividend first. So friends, there are around 100 companies, more than 100 companies who are going to pay the dividend in next 2 to 3 weeks, but we will focus on the ones uh, which are providing heavy dividend yields. So in our list, the first one is Force Motor Limited. It is allocating around 40 rupees per share. Okay, around 400%, and the X date is 10th September, that is tomorrow. Then next is Nilon Limited. It is giving around 11 rupees per share, and it is around 110%, and the X date is 11th September. Mastech Limited, it is going to give around 16 rupees per share, and the X date is 12th September. KSE Limited, it is going to pay around 50 rupees per share, which is huge, and the X date is 12th September 2025. And then the next one is Empire Industries, and it is paying around 25 rupees per share, and the X date is 15th September. Dixon Technology is also there, and it is paying around 8 rupees, 400% dividend yield, and 16th September is the X date. Then next is Honda India. It is paying around 21 rupees 50 paise, and the X date is 18th September. Then is Victoria Mills Limited. Even it is also paying rupees 50, and the X date is 19th September. Gujarat Alkalines and Chemical Limited is paying around 15.8 rupees, and the X date is 19th September 2025. So these are the updates from the dividend side, and there is information coming up from the Infosys that they are going for the buyback, and they will share the proposal on 11th September, and based on that the decision will be taken up. And there is a stock split in Titan Intech Limited, Fisher Medical Ventures, and now let's focus on our last segment, that is FIs and DIs. So on 8th September, the FI cash activity was around minus 2000 crores, where DI has bought around 3000 crores. If we 30 days, if we see the stats, FI cash activity was around 40,000. So they have sold around 40,000 crores, and DIs have bought around 74,000. So that's the reason our stock exchange, whether it is NSE, BSE, Nifty 50 and all, right, it, for example, Nifty, if you take an example of Nifty 50, it is around it is hanging around 24,800 to 25,000. Okay, and the main reason is DIs and the retail investors are they are buying heavily, though FIs are selling it. Okay, Thank you, friends. Please let me know if you like the video.